Here's something I teach my students about handling their investments and pensions, which might be useful to you. Of course, in a rising market, it's very easy what to do. You just hold. You let your profits run. You're patient. The main worries happen in the second and third categories. A moderate fall. And of course, you don't know whether a moderate fall is going to be a steep one, which is why we have something called the daddy bear rule, but I'll come to that in a second. So of course, all steep falls begin life as a moderate fall. So on a moderate fall, you might buy some of the quality companies, and that's generally one of the rules of the quality companies. They're of such a nature that you'd want to buy more if there was short falls. You'll know famously I've mentioned some of what I call my Quality 5 and the Quality 5 Plus. The Quality 5 Plus is some 37 companies which consistently year after year for many years have produced exceptional returns with relatively few drawdowns, and those drawdowns tend to snap back as a rule, and steeper falls are relatively easy to predict based on short and medium term prices. But putting all that to one side, take a Microsoft, for instance, kind of company where generally the rule is to buy more were it to fall. And this is where discipline is important. And of course, on a moderate fall with everything else outside of that, there really isn't any action to be taken. It's only a moderate fall. You just don't panic. So what about if the fall becomes more severe, like 2022? Remember, these falls don't happen overnight. Well, generally, you would either stick to your stop losses and exit, or because it's part of a model portfolio, a longer term hold, which incorporates some of these more severe falls. Again, you don't have to do anything. So it prevents emotional overreaction. You already know from the model that you're supposed to hold for a long term, or you know from your shorter term appetite that to avoid a steeper fall, you'll stick to your stops. Of course, the downside of that is something I'll show you in a second. And in a sideways market, well, you just have to wait. To give you an example, 2021, Microsoft rose about 50%, but for 9 of those 12 months, it was nowhere. There's a negative or zero return. Okay, so let's look at that in a bit more detail, because still here the question could arise, well, how do I know which one of these it is? Well, of course, you know when it's rising, you know when it's sideways. It's really the concern between whether is that moderate fall going to become more severe. That's really the biggest worry you ever have. So let's look at that. Now, path A is the more emotional investor. They buy and they see the stock drop. I'm just looking at the screen off the